All right, so welcome back to TalkTickers, where we like to really dig deep into earnings calls. And today we're looking at Chewy, a big name in the online pet world. And we're breaking down their fourth quarter and their full year 2024 numbers. And, we want to skip all the dense reports and really get to the heart of what's going on with this company and what it means for them moving forward. So the big question, we're kind of trying to answer here is after, a little bit of up and down growth, can Chewy really chart a path to, solid profitability and expansion over the long haul? That's the question, what we're going to try to figure out.
Absolutely.
So let's start by just kind of, unpacking some of these key numbers and see what kind of story they tell.
Yeah, for sure. So, starting with the fourth quarter of 2024, Chewy actually saw a pretty significant jump in their net sales. They were up about 15% compared to the same time last year, and that landed them at $3.25 billion. Now, if we zoom out and look at the entire year, their net sales came in at $11.86 billion, marking a 6% increase year over year. However, it's important to note that both of these periods actually had an extra week, which is kind of a quirk in the calendar this time around. And this extra week contributed about $227 million to their overall net sales totals. So if you back that out to kind of see what the underlying growth looks like, you're still looking at a pretty healthy 6.9% increase for the fourth quarter and a 4.4% increase for the full year.
Okay, so top line growth looks good, even when you sort of factor in that extra week. But beyond just the sales figures, what are some of the other things that we should be paying attention to?
Yeah, absolutely. So I think one of the most interesting things that popped out was their return to growth when it comes to their active customer base. They ended the year with 20.5 million active customers. This is a big deal because it's actually the first time they've seen year-over-year growth in this metric in 2 years. So that really suggests that their efforts to attract new customers and keep their existing ones happy are starting to pay off.
That's a huge deal because, in the world of e-commerce, attracting and keeping customers is really the name of the game. And their auto ship program, that's still a major driver for them, right?
Oh, absolutely. It's a powerhouse for them. Their auto ship program represented a whopping 80.6% of their net sales in the fourth quarter. And we're seeing that the sales from those auto ship customers grew by an impressive 21% in Q4 and almost 11% for the full year. So this is a clear sign that they've got a loyal customer base that depends on Chewy for those regular repeat purchases.
Yeah, and that kind of predictability, when it comes to revenue, that's got to be something that investors really
absolutely
look for and appreciate.
Absolutely. It gives them a lot of stability.
For sure. So we see the top line growth, we see the rebound in customer numbers, we see the strength of the subscription model. But what about the bottom line? Are they actually becoming more profitable?
Yes, they're definitely showing improvements on that front. Their adjusted EBITDA margin for the whole year landed at 4.8%, which is about a 150 basis point increase compared to the previous year. And on top of that, they generated a record $452.5 million in free cash flow in 2024, basically converting about 80% of their adjusted EBITDA into cash. And, that kind of cash flow gives them a lot of flexibility and a lot of options for the future.
It certainly does. And it sounds like they're choosing to give some of that back to shareholders.
Precisely. They were actively buying back their own stock in 2024 to the tune of $943 million. So that's a pretty clear signal that they're confident in their future and they're trying to boost returns for their investors.
So overall, pretty good, kind of big picture view. But let's really zoom in on that return to active customer growth because, you mentioned it could be a turning point. So beyond just, simply getting more new customers and having fewer cancellations, what else might be fueling this? Are there any kind of shifts either in the market or in their own strategy that might be contributing to this?
That's the million-dollar question, isn't it? While they're saying it's about those new customer additions and better retention, you have to wonder, if something's changing in terms of the competition, are some of their rivals maybe scaling back? Or has Chewy genuinely found a way to offer a better deal, a more attractive value proposition? Maybe their efforts to improve your website and their app to make the user experience better. Maybe their marketing is getting more effective. Those could all be playing a role. And then there's a whole question of whether the big jump in pet adoptions we saw during the pandemic is finally leveling off. And Chewy's just in a really good spot to capture that steady demand. The fact that they managed to grow their customer base after a period of decline suggests that there's more going on here than just a little bit of luck.
Yeah, no, that's a really good point about the competitive landscape. So now let's talk about how much each of those active customers is spending. That's what they call the net sales per active customer, or NSPAC.
Right.
What's happening there?
So NSPAC hit $578 by the end of 2024, which is a 4.1% increase year over year. But here's the thing. We got to remember that extra week in Q4, it added about $11 to that figure. And that little quirk is going to stick around and probably inflate their reported NSPAC for the first 3 quarters of fiscal year 2025. So while the growth is definitely positive, it's important to keep in mind that there's this one-time bump that's making the numbers look a little bit rosier than they might otherwise be. It really raises the question of how much organic growth they're seeing in customer spending once you strip away the impact of that extra week.
Right. So I got to be careful not to get too excited just based on that, quirk in the calendar. So now let's talk about where Chewy is actually making their money, in terms of what people are buying. What's driving these improvements that we're seeing in their gross margin?
So for the full year, their gross margin expanded by a solid 80 basis points to 29.2%, which is actually a faster rate of improvement than they saw in the previous year. And the biggest factor behind this is the growth of their sponsored ads business. This now accounts for about 1% of their total net sales. And on top of that, there's been a shift in the kinds of products people are buying. They're moving toward more premium items, especially in categories like consumables and health and wellness. And these categories tend to have higher profit margins.
Sponsored ads. I mean, it feels like every e-commerce platform these days.
The trend is
trying to really...
Everyone wants a piece of that pie.
Yeah, build that out.
Yeah.
How is Chewy positioning themselves in that space?
So they've recently finished moving their entire sponsored ads platform to a first-party system, which gives them much more direct control and should make things better for their suppliers who are, paying for those ads. But even more importantly, it allows them to really expand their ad offerings. So now they can start offering things like offsite ads, video formats, you name it. And their goal in the long run is for sponsored ads to contribute up to 3% of their total net sales, which would be a pretty significant boost to their profitability. So the question now becomes, how quickly can they scale this up? And how competitive is that advertising space going to get within the pet industry?
That's a good point. There could be a lot of competition for those ad dollars. So now let's shift gears a bit and talk about costs. Because running an e-commerce business of this size, it's got to be expensive. How are they managing their operating expenses?
Yeah, well, it seems like they're keeping a pretty close eye on things. Their SG&A expenses, that's selling general. And administrative as a percentage of their net sales actually got better year over year, both in the fourth quarter. And for the full year, they're saying this is because they've been really smart about building out their infrastructure and keeping those fixed costs under control. And they've also been pretty disciplined when it comes to corporate payroll. They're not just throwing money around. And their advertising and marketing spend for the year came in right where they expected it to be, which suggests that they're really strategic about how they're trying to attract and keep customers.
Yeah, so it sounds like they're finding ways to be more efficient as they grow.
Exactly. They're learning how to do more with less.
Which is, that's the magic formula, right? Growing revenue and keeping costs under control.
Right.
And that's leading to, as we said, stronger profitability and better cash flow. And that free cash flow number was impressive. So beyond just the share buybacks, what are their plans for all that cash?
Yeah, well, those buybacks are definitely a big chunk of it. But that strong cash flow also gives them the freedom to invest in other areas. Maybe they'll look at expanding their services even further, like with those vet clinics we're going to talk about. Or maybe they'll explore some strategic acquisitions. And they've already said that they expect to keep converting a big chunk of their EBITDA into free cash flow in 2025. So they should have plenty of capital to pursue those growth initiatives. The key will be figuring out how to allocate that capital in a way that generates the best returns for them in the long term.
Speaking of the share buybacks, the scale of their repurchases in 2024 was pretty notable, especially that direct purchase from their biggest shareholder. What do you make of that?
Yeah, that move with BC Partners is interesting. It could be a sign that BC Partners is looking to reduce their stake in the company. And Chewy's giving them a way to do that smoothly and efficiently, while also, shrinking the overall number of shares out there, which can help boost their earnings per share. And then those open market repurchases that they're doing, that helps to support their share price as well. So it's really a win-win for the company and the remaining shareholders.
Now let's talk about Chewy dipping their toes into the physical world with their Chewy vet care clinics. How's that experiment going?
Yeah, it seems like things are picking up speed with that initiative. They opened 8 locations in 2024. which is actually more than they initially planned. And they're saying that those clinics are doing well, they're serving as a new way to attract customers, and they're also helping Chewy build stronger relationships with their existing customers. And they're not slowing down. They're planning to open another 8 to 10 clinics in this current fiscal year. So they clearly believe in this strategy. So the big questions become, how are these physical locations going to fit in with their main online business?
Yeah.
And what's their long-term vision for Chewy's role in the overall pet healthcare market?
Yeah, so it sounds like they see these clinics as more than just a standalone service. It's part of a bigger ecosystem.
Exactly.
So now let's look ahead. What kind of outlook did they give for 2025? What are they expecting in terms of growth and profitability?
All right, so for the first quarter of 2025, they're projecting net sales between $3.06 billion and $3.09 billion, which would represent a 6% to 7% year-over-year growth. And for the full year, they're anticipating net sales in the range of $12.3 billion to $12.45 billion. Now, when you adjust for that extra week that they had in 2024, that also translates to an expected growth rate of 6% to 7% for the full year. And they're saying that this growth is going to come from continued expansion in their active customer base, plus growth in NSPAC, and they're only expecting to raise prices a little bit. They're forecasting low single-digit growth in their active customer base throughout the year, and they expect their adjusted EBITDA margin to be between 5.4% and 5.7% for the full year.
Okay, so steady growth all around. That sounds pretty encouraging. Any other key financial details that they gave in their 2025 guidance?
Yeah. They gave some estimates for things like share-based compensation, their net interest income, and their effective tax rate, all of which are important for anyone trying to model their future earnings.
Yeah.
And they also don't expect tariffs to have any significant impact. So it's a pretty detailed outlook, which suggests that they have a pretty good handle on what they think is going to happen.
Finally, let's zoom out and look at the bigger picture, the pet industry itself. How does Chewy see the current landscape, and what are their expectations for their market share moving forward? So they're pretty confident. They believe that they actually gained market share in 2024, outperforming the overall pet industry. And they pointed to the ongoing shift towards e-commerce in this sector, and they highlighted their own strong search performance relative to the market. They're also saying that pet adoption trends seem to be pretty stable at the moment. And inflation in the pet industry has cooled down, and they don't expect it to have a big impact in 2025. So all in all, Chewy is feeling pretty bullish about their ability to keep gaining market share. They're projecting that their growth is going to be about double the overall market growth rate. And they estimate that online sales currently make up something like 28% to 30% of the total pet industry. So that suggests that they see a lot of room for continued growth, both in online penetration as a whole and for their own slice of that pie.
Yeah, it sounds like they're positioning themselves as a leader in a market that's still growing.
Yeah.
So now for our This Is Not Financial Advice segment, the part of the show where we let our imaginations run a little wild, but within reason, based on everything we've talked about.
What's an outrageous but plausible trade idea that you're seeing here?
All right, so here's a thought that kind of connects a few of the dots we've been talking about. Chewy's making a big push into pet health with these vet clinics. But right now, they don't offer pet insurance directly. But think about it. They have this huge, engaged customer base, and they're really trying to build themselves up as a trusted partner in pet healthcare. So what if instead of trying to get into the insurance game themselves, which is a very heavily regulated area, what if they went out and made a big partnership or even an acquisition with a leading pet telehealth company? Imagine if Chewy could integrate virtual vet consultations right into their platform, powered by this telehealth partner. It would make their platform even stickier for customers. It would be a valuable new service, and it would really solidify their place in the overall pet care world. So here's the outrageous but plausible trade. Consider a long position in a publicly traded pet telehealth company, betting that Chewy's ambitions in pet health could lead to a partnership or an acquisition that sends that telehealth company stock price soaring. Of course, this is all speculation. This is not financial advice, but it just shows how Chewy's moves could have ripple effects throughout the industry.
Yeah, that's a really interesting angle, playing the picks and shovels of Chewy's expansion into pet healthcare. So just to kind of wrap things up, our deep dive into Chewy's earnings revealed strong revenue growth, a big comeback in terms of active customers, improving profitability driven by things like their ad business and the shift to those premium products, and ambitious plans for continued expansion, especially in the vet care space. So these are the trends to watch. As Chewy keeps evolving in this dynamic pet industry, what stood out to you as the most significant takeaway from this call? We always encourage you, our listeners, to take these insights and go do your own in-depth research. Join us next time on TalkTickers as we break down another important earnings call and try to make sense of the numbers that drive the market.